Boo-yah! Goldman Sachs is making a move. This isn't just another headline. This is the kind of news that can shake up the entire financial world in a matter of minutes. When Wall Street's titans talk, I listen, and so should you. These are the power players who set the tone for global markets, and their moves can ripple across every sector. We're talking about Goldman Sachs, one of the most powerful investment banks on the planet. Their influence stretches from New York to London to Hong Kong, shaping the future of finance. Their calls move markets, not just stocks. When they make a bold prediction, traders and investors everywhere sit up and take notice. When Goldman gets excited, it's time to pay attention. Their track record for spotting big trends is legendary, and they don't make these calls lightly. Today, April 22, 2026, they're fired up about oil. The energy sector is in the spotlight. With global demand shifting and supply chains evolving, oil is back in the headlines in a big way. This isn't a lukewarm maybe, it's a table-pounding, bullish call. Goldman is putting its reputation behind this move, signaling real conviction. Goldman's done the homework, and they're pointing to a potential gusher of profits. They've dug deep into the data, and the numbers are telling a powerful story. When a firm managing trillions singles out a company, it's a major event. The ripple effects can be felt across portfolios worldwide. Their reputation is on the line every time. They know the stakes, and they don't make these calls unless they're confident in their research. They've crunched the numbers, analyzed global demand, and zeroed in on an oil player ready to knock it out of the park. This is the result of months of analysis and debate. When they share that opinion, it's like getting a sneak peek at the answer key. It's the kind of insight most investors only dream about. So buckle up. We're diving into why this call matters, what it means for oil, and what it could mean for your money. The next few minutes could change how you see the market. Don't sit on the sidelines. Get in, get educated, and see why this Goldman Sachs call is the biggest story in the market right now. Booyah! Let's break down what it really means to be bullish in the world of finance. When someone's bullish on a stock, they believe it's going up. Imagine a charging bull, horns thrusting skyward, full of unstoppable energy. A bullish analyst sees strength, a bright future, and an undervalued stock. It's a green light, a signal to move forward with confidence. Bearish is the opposite, a bear swiping down, signaling trouble ahead, warning investors to be cautious or even step back. But today, it's all about the bull. When a powerhouse like Goldman Sachs says they're bullish, it's not just a hunch. It's a calculated prediction based on deep research and careful analysis. Being bullish is about optimism and expecting strong earnings, good news and rising prices. It's the belief that the market or a specific stock is set to soar. A major firm's bullish call is like adrenaline for a stock. Hedge funds, mutual funds, and everyday investors all take notice and may act quickly. This isn't just a feeling, it's backed by hard numbers, financial models, and hours of research. Analysts dig deep to find the facts. Analysts project revenue, expenses, and profits, scrutinizing every detail to make sure their bullish stance is justified. A bullish call means the numbers look spectacular and the outlook is bright. It's the financial equivalent of engineers declaring a rocket ready for launch. Anticipation, excitement, and high expectations. That's conviction from people whose job is to be right about the future of money. When you hear bullish, think optimism, research, and a bet on growth. Oil companies are more than just gas stations. They're massive, complex operations that touch nearly every part of our daily lives. These corporations are responsible for powering economies, fueling transportation, and providing the raw materials for countless everyday products. First, there's upstream, exploring and drilling for oil and gas, often in some of the world's most remote and challenging environments. Using cutting-edge technology, they search for new reserves deep underground or beneath the ocean floor, and then extract those resources with massive specialized equipment. Next comes midstream, transporting and storing oil and gas through vast networks of pipelines, giant tankers crossing oceans and enormous storage facilities. This is the industry's logistics backbone, ensuring energy flows smoothly from where it's found to where it's needed. Finally, there's downstream, refining crude oil into gasoline, diesel, jet fuel, plastics, fertilizers, and a huge range of other products. These refineries are like giant chemical factories, turning raw oil into the fuels and materials that keep modern life running. Investing in a big oil company means betting on their ability to find, move, and refine oil into products the world needs. Their profits come from the difference between what it costs to produce and transport oil, and the price they can sell finished products for. It's a business that requires huge investments, sharp strategy, and constant adaptation to global markets. It's a gigantic, vital business. Understanding these moving parts is key to seeing why a company might break out or break down. Every stage, from exploration to refining, can impact profits and risks in different ways. When you invest in an integrated oil giant, you're buying into every step of this process. That's why Wall Street pays such close attention to their performance, analyzing every report and market move. The stakes are huge, and the impact is global. These companies shape economies, influence geopolitics, and affect the environment. That's what makes them so important, and so closely watched by investors and governments alike. Earnings season is Wall Street's Super Bowl, 4 times a year. Companies reveal how they did. Did they make money? Did they beat expectations? This is the ultimate report card. Analysts like Goldman Sachs set estimates, and the drama is whether companies beat, meet, or miss them. A beat usually sends stocks soaring. A miss can tank them, even if profits are strong. But it's not just about past numbers. Guidance, management's forecast for the future, can move stocks even more. Strong guidance can boost a stock, while weak outlooks can crush it. This is the high-stakes game where fortunes are made and lost. That's why everyone's watching. So why is Goldman Sachs pounding the table for this oil company? First, oil prices. When they're high, profits soar. Goldman likely sees strong or rising prices ahead. They're watching global supply, demand, and geopolitical risks that could push prices higher. But it's not just about oil prices. Goldman looks for best of breed. Companies with disciplined spending, low debt, and shareholder-friendly moves like buybacks and dividends. Maybe this company has prime drilling locations or efficient refineries, making them profitable even if prices dip. It's about having the right assets, strategy, and management. Goldman's bullish call combines a positive industry outlook with confidence in this company's execution. That's the perfect setup for a stock to take off. And that's why this call matters. This isn't just about one stock. Oil prices affect everyone. When crude goes up, you pay more at the pump. It's a direct hit to your wallet, but it goes deeper. Higher oil prices mean higher transportation costs, which businesses pass on to you as inflation. Demand matters too. High oil demand signals a strong economy. Factories running, planes flying, goods shipping. So when Goldman forecasts strong demand, it's a vote of confidence in economic growth. A bullish oil call can signal broader prosperity. It's not just Wall Street news, it's about your daily life. Understanding these dynamics helps you make sense of headlines about inflation and growth. Oil prices are a vital sign for the global economy. Watch them closely. They impact everything. That's why this story matters to you. Maybe you're skeptical. Why care what Goldman Sachs thinks? Here's why. They have resources most investors can't dream of, access to CEOs, proprietary data, and teams of experts. When Goldman issues a bullish call, it sends a massive signal to the market. Big institutional money often follows, driving stock prices higher. Their call can validate your own research, boosting your confidence. Are they always right? No. But investing is about probabilities, not guarantees. Aligning with deep research and market-moving power increases your odds of success. Ignoring their insights is like turning down a free lottery ticket. It might not always pay off, but why not take the chance? Use their calls as a tool, not gospel. That's how you play smarter. So, what does this mean for your money? A bullish call from Goldman is an opportunity generator, putting a company and sector on your radar. Don't just buy because Goldman said so. Use it as a catalyst for your own research. Read earnings reports, listen to calls, check the charts and understand the business. This is also a chance to review your portfolio. Are you underexposed to energy? Maybe it's time to rebalance or consider an ETF like XLE for sector exposure. This is about sector rotation. Money moves from one area to another, and right now, energy is hot. Following big institutional calls helps you spot where the smart money is going. Make informed decisions, not emotional ones. News like this gives you insight into both the big picture and the details. It empowers you to talk strategy with your advisor or make confident moves yourself. Don't be a bystander, be an active, engaged investor. That's how you win. There you have it. Goldman's big bullish oil call decoded. We've covered what bullish means, how oil companies work, and why earnings season matters. This isn't just financial news. It's about real-world forces shaping your wallet. Knowledge is power. The more you understand, the better you navigate the markets. When a credible source lays out a case, listen, learn, and decide if it fits your goals. These calls are breadcrumbs to potential profits. Follow them, investigate, and build your knowledge. My job is to help you find the signal in the noise. Whether you buy, sell, or hold, analyzing these calls makes you a smarter investor. Next time you see a bold headline, dive in. Ask what it means for you. Don't get mad at the market. Get educated. Booyah!